Hi there traders, this is Steve Miley, the market chartist of FX Explained, and this is our regular weekly macro watch catch up. And today we're going with hesitancy caught between a FOMO rally and a second wave worries. So let's take a look at first of all the macroeconomic and geopolitical developments of the past week. While the Fed has continued its support for financial markets, pledging to further support the credit markets outright buying of individual credit in the credit markets alongside the previous support they'd offered. That came at the beginning of last week and gave overall financial markets a slight boost back to the upside in here. But overall, Jerome Powell was still very downbeat in his testimony this past week to Congress. In his testimony, he continued to state, as the Fed stated the prior week in here, a fairly somber, downbeat outlook for the US economy going to the balance of this year, which certainly damaged the risk-on moves that we saw from late May through early June. We'll come to that as we go forward in here. But that negative tone that we saw from the Fed 2 weeks ago in the middle of June in here, reinforced by Jerome Powell over the past week. And also on the negative side, we've had COVID-19 cases still on the rise in numerous US states, in the South, in Florida, and in California. And so a very negative picture in here potentially for the unlocking down of the US economy, with many states seeing rises in the number of cases, coronavirus cases and deaths. That has led Apple to again close some stores in some states in here. Back on Friday, they announced that. So then again, a corporate reaction, new lockdowns potentially coming for potentially some US states. There's also that COVID-19 outbreak in Beijing, been contained as of now, but again, highlighting the risk from a second wave across the globe. But lockdown rules are continuing to be further eased in the UK, in Europe, and in parts of the US. And then obviously that's allowing economies to restart, but also then heightening that threat of a second wave coming as we go into the summer. The final thing we want to talk about from last week is that the Bank of England on Thursday added 100 billion to their bond buying programme, £100 billion, as anticipated. So let's have a look at how this has all impacted on global financial markets with the developments there. Well, the S&P 500 did get a boost back higher on Thursday, but since then has been very in a consolidation thing with a negative end to the week, having had that sell-off the previous week from mid-June post the Fed, post the FOMC's more downbeat outlook. And this kind of echoes what we're seeing across US and European global equity indices in here, a more neutral consolidation theme with a weak close on Friday. And although markets were up for last week, still suffering the negativity and the more cautious negative tone in here since the middle of June. The US dollar index has continued to climb higher. This is seeing a general US dollar rebound. The US dollar strengthening against most major currencies in here over the past week and since the middle of June on the back of a safe haven bid as we have this more cautionary tone, concerns about the second wave, concerns about maybe not as strong a recovery in the US and global economy. And the only place that the dollar is not really that strong is against the yen. Dollar yen had a significant sell-off from the middle of June and then probing lower in here over the past week. Dollar yen lower, remember, is weaker dollar, stronger yen. So the yen, the strong currency, with the dollar not far behind, highlighting this more of a slightly risk-off phase in the FX markets and more of a negative tone in here overall. Risk-off phase, stronger yen, stronger US dollar. And that's been most typified with the euro, certainly negative in here, selling off in the past week, taking out some important supports in here, threatening or signalling actually a more of a short-term topping pattern and aiming lower in the short to intermediate term. And similarly with the pound as well, a more negative pound in here last week, selling off again, having already sold off in here against the dollar. Cable pushing lower, both for a slight reaction, negative reaction for the pound in here, but also reflecting that US dollar strength. COMEX copper in here has tried to slightly rebound, but kind of unsuccessfully. We had a fairly negative end to last week on Friday, a negative candlestick there you see, and having had that sell-off since, again, the mid part of June after the Fed's more downbeat outlook for the US economy, and this still looks more like a hesitant downside correction. And slightly bucking the trend in here is the oil, price, the oil futures price in here, rebounding last week, taking back the losses that we saw the prior week post-Fed, post the Fed announcement, and a slightly more positive tone in here, you have to say, for oil. So kind of bucking the trend, which is seen really over the past week in here, a slightly more negative tone from equity markets, certainly a more negative feel, a risk-off feel in here in the Forex space, and commodities in here slightly mixed as they copper in there still looking relatively negative, but oil slightly firmer. So let's take a look at the week ahead, the week commencing the 22nd of June. Well, on the central bank side, with our central bank watch, we're going to get the PBOC, the People's Bank of China's interest rate decision Sunday night into Monday. And then we have the RBNZ later in the week on Wednesday to keep an eye on. We're going to certainly be monitoring US COVID-19 cases. They're going to be in the spotlight, in focus, with this kind of either late first wave or new second wave outbreak of cases in the south, in Florida, and in the south, in the southwest, down in Arizona, and to a lesser extent California. So let's look at the data for the week. That in PBOC interest rate decision Monday. Global market flash PMI going to be the big data we're going to really be watching coming through for June on the Tuesday. RBNZ meeting and statement. We've already looked at that on Wednesday. And then the German IFO survey. We have US gross domestic product, PCE, personal consumption expenditure, and durable goods data in here coming through Thursday. And then Japanese consumer price index and the Michigan consumer sentiment survey on Friday to wrap up the week. I'm going to wish you all a great trading week, and please do be safe out there. Take care. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.